Hey everyone, I'm back again with another video. I wanted to first of all start by saying this channel is up to 150 subscribers as of tonight, so I'm really excited about that. I wanted to say thank you to everyone who's subscribed. I really appreciate it. It makes me feel good that you guys think that what I have to share has value, and I appreciate that. That being said, I'm going to create a Telegram channel for all of us, and I would really like it if you joined. That way you can talk to me directly, and we can talk about footprint charts, just regular charts, anything really that you want to chat about or have questions about or want more clarity on. I would say the thing I know the most is most likely price action and footprint charts, and that's in volume, and that's primarily about what I base all my analysis on. So I think we can all learn from each other, and maybe something great will happen from the Telegram group. You never know. So I'm going to start one, and please join it. I'll put a link in the description for that. Okay, so in this video, the main point I wanted to get across is something that I've learned over the last few years of trading, and something that I believe will help a lot of people kind of smooth out the noise or tone out the noise in trading, and that is the logarithmic chart. The reason that I started to like this chart so much is because it takes the stress out of trading. The reason I say that is because you can clearly map a channel like you see here on my screen, and you can easily see, I mean, a 2-year-old could see the accumulation and distribution areas on the chart. As opposed to something like this, let's go back and look at Ethereum real quick. This is actually Zilliqa, but we're going to look at Ethereum, and we're going to take it off the log scale. Okay? This is what you're left with. To me, this looks a little bit harder. Of course, you can see the accumulation periods and things like that, but it looks a little more noisy. It looks a little more hard to decipher, and there's nothing wrong with looking at it this way, but I prefer to take a logarithmic scale and go on a bigger time frame, and you can clearly see here the accumulation and distribution zones. So obviously you should be buying near the bottoms of the channel. These are good buy areas, and you want to be a seller near the top, okay? Or hedge. Now I will make a video about hedging another time, but you want to get the best prices possible, okay? And we'll go more into that in a second, but just realize that the key areas you want to be looking for are down at the bottom. You want to see the reactions on the middle, like we're seeing right now, and you want to be a seller near the top. And then you can make other decisions based on what happens. If you break out, you may want to buy and realize we're in a new trend. If you do break down, you want to be a seller and you want to hedge. So let's go back to Zilliqa. This is one I've had my eyes on a lot recently. I made a video about this. Sorry, it looks a little weird sometimes when you go back and forth, but I'll fix this for you. Let's just look at it this way. So basically what I have here is this little, well, first of all, there's a parallel channel going up, and you can clearly see when you should be buying and when you should be selling, okay? Now, you don't want to stray from this. This is basically like training wheels for trading. If you do this, you will be okay. There's really not much to it, to be honest with you, other than patience, okay? And I've talked about patience in my trading videos before. It is the most important thing in trading, and that's why so many people fail. I mean, there's a lot of reasons, but one of them is just not having patience. So what I have here is the little dollar sign. That means that you should be a buyer in these areas near the bottom of the parallel channel, and you want to be hedging or selling at the tops or near the tops. When you start to get near the top, that's the end of the race. That you've bought at the bottom. Here's the end here, and you're a happy camper. And you can just wait after you hedge, and you see that the market's going down. You see it close below the middle area, and then you come out of your hedge position and go back into your crypto. You do this again and you wait. Now here would have been it would have been a fine place to start hedging a little bit, and then you just average out of your position. Same here. You don't buy all at one time just because it hits the bottom of the channel. You start to average and accumulate in. One other interesting thing that I really like about the log chart is that if you take previous price action, there's a little tool here. Let me pull out my favorites. I believe it's called the bars pattern. And you stick the magnet on and you can say, okay, last time that we hit the bottom of the channel, it took this long to get to the top, even though that wasn't the bottom. And you can kind of take that price action and stick it over here, and you can get a relatively close date. Like if this happens, we should see the top somewhere between August of this year and November, around that area. So you can kind of time your trades that way, which is very, very helpful, I believe. I also put some information over here. So it says your job is to see what stage the market is in and react to it in the proper way. What I mean by this is that a lot of times we get antsy as traders, okay, and you overtrade, you want to make money, you want to do this, you want to do that. I would promise you that 75% of people who are overly aggressive with trading, especially if you're not a professional, they lose their money, okay? They just do. It's because they overtrade, they get too anxious, they don't take profits when they should, they let their losers run longer than they should, they don't understand risk management, and they don't understand patience. They don't understand a key concept. Your job is not to come to the market with demands. That's what this unhappy face is for, because this will cause you to lose money. If you approach the market with any kind of expectation or demand that is not in accordance with what's actually happening, you're going to fail. And a lot of people will, and they'll lose money trading and they'll give up. But if you approach the market as you are reacting to the market, so the market has priority, the market has say, and your job as a trader is to react to that. What is it telling you? You need to react to that. Your job is not to tell the market what to do. Your job is not to go and say, I want to take a long position because I want to take a long position. Your job is to look at the market, hear what the market is saying, and you respond with the correct response. You don't respond with what you want to say. You don't respond with what you expect. You respond with what the market is telling you. It tells you what to do. You don't tell it what to do, okay? Remember that. So right now, what is the market telling us? The market is telling us we are at the bottom of the channel with Zilliqa, and we should be accumulating slowly, dollar cost averaging in. The reason you do that is because if you're wrong and it breaks down and we start closing below here, you don't want to get wrecked, simply because you bought, because there's a red candle here, you bought all at one time. No, you want to start accumulating positions over time. Look, this is several weeks that these accumulation zones last, right? So you take your time, you buy a little bit every day, you dollar cost average in, and you dollar cost average out into your hedge position as well once it starts to get near the top of the channel. Because you never know. You never know exactly what's going to happen, but you go with your probabilities and you start exiting near the top of the channel. If you do this rather than sit there and watch the market every single day, you will be much, much better off. You can go enjoy time with your family. You won't be losing money every day on small trades that don't make any sense. You're going to accumulate at much different prices. You're going to average in, and you're probably going to get a much better price overall than just going all in at once. And you can go do things that are more important, like I said, spend time with your family. You can go exercise. You can go hang out with your friends, go make new friends, do things like that. I've been in this for about 3 years now, and what I've seen is the guys who are constantly on, trading every day, day traders, on Twitter, on this and that, bragging about how much they make, a lot of those people are really unhappy, and you got to take that into consideration. Do you really want to be one of these people that stares at the charts all day and has no social life? That's up to you. I'm not saying there's anything wrong with it at all, but I prefer to exercise. I prefer to have a healthy balance in my life. And I think people that overtrade, a lot of times, you know, that maybe their cortisol levels get jacked up and they age a little faster. Like they're very stressed out people. So just keep that in mind. If you like to trade, you know, in like day trading, like in and out, and we can get into the exo charts and stuff like that. But until you understand how to manage risk and when to take profit and get your training wheels going, day trading is absolutely going to wreck you. So all that being said, I just want, you know, to try to kind of look out for you guys and give you my ideas, and, you know, you can learn from my mistakes. And hopefully this made sense, and I hope you join the Telegram, and that's going to be it. And I hope you guys have a wonderful night. Take care. Bye.